The Best Way to Explain It, Episode 24. Hello, everybody. Welcome back to another episode of The Best Way to Explain It, the podcast that's almost worse than my ability to grow facial hair.
Ouch. Burn on our podcast, but also burn on your inability to grow a beard.
Yeah. It's sad.
And yeah, I would donate. I tell people all the time that I donate my facial hair because it's so lustrous and amazing.
I don't know what lustrous means, but okay.
Whatever. I'm making up words now.
I think you meant luscious.
Luscious is one word, but lustrous is a word, I'm pretty sure.
Is it?
It's more like shiny, a shiny metal object.
Lustrous.
Like
okay.
a luster. Yeah.
Okay, lustrous. YourDictionary.com defines lustrous as fantastic, amazing, splendid. Wow, okay.
Boom. Told you.
I'm impressed.
Yeah, I know words because I play my mom on Words with Friends 5 games at a time.
Hey, you get 10 points for a mom reference.
Ayo.
Because I didn't do it, so that means I get 10 points too.
You get 10 points for not making a mom reference, and I get 10 points for making a mom reference.
And thus, by the rules of mom references, we're tied.
I feel like we're both tired, like it's a Monday or something, and we're recording a podcast that should have been recorded a long time ago.
Yeah, but you know,
who would slack off enough to do that?
I don't know. Wait, I do.
Hey, it's your co-host.
Yeah, it's your boy
here with you. I want to say 90% of the time.
Yeah, probably. Well, I think how many episodes you missed? 2?
2, yeah.
That's 24. 2 divided by 24 is 1/12. 1/12 is a number that's
8-ish. 8%.
Yep. So you're 92% of the time you're here.
Boom.
That's a mathematical fact. You know where else you might use math?
thebestwaytoexplainit.com?
Probably not.
Yeah, I doubt that, but you never know.
I was going for stock markets.
Oh, I never would have guessed that.
Yeah?
Yeah.
Well, then you're an idiot.
I guess you could use math. I've heard that they just use a lot of drugs and stuff, and that's how they trade stocks because it's all imaginary.
Wait, so what is a stock?
Well, if you were wondering, a stock is partial ownership in a company.
Oh, I'm getting ahead of myself. All right, I'm going to let you do your intro.
It's all good. So with that wonderful introduction that throws me off my game, you've probably heard of a weird thing called the stock market. And while I'd love to tell you that it's a nice place where you buy an assortment of nice socks and warm garments for your feet, that would actually be a stocking market. So quit looking on Amazon for socks to call it a stock market. Wow, that was terrible.
That was you're reaching just a little bit.
I am. Yeah. So those are 2 completely different things, but my good friend Chris, our good friend Chris, and famous winner of the Amazon Echo, by reviewing the podcast, which you can still do on iTunes or wherever you get your podcasts.
Yes.
He texted me the other day after discussing another friend's purchase of Bitcoin, and he wanted to know...
Which you can know about if you go to... oh, boy. I don't remember the name. I don't remember the episode number. It's like 16 or 17. You wouldn't know. It's one of those,
yeah.
It, but
I wouldn't know. That was your solo episode.
8% of the episodes that you weren't on. So, yeah, but I do have an episode on Bitcoin if you want to know what that is. Go ahead.
All right. So he wanted to know what the stock market was, and I, being the all-knowing person that I am, took on this hefty obligation. So I'd first like to disclaim that I'm invested in a 401k, which may or may not be involved in any of the stocks I talk about. I talk about some of the stocks that are in the Dow Jones Industrial Average Index. and my family is invested in some of those. So I think I have to disclaim that. I'm not telling you to buy these stocks. Consult a financial broker person. All right. I think that gets me out of any legal
Do
responsibility.
you really have to do that? Oh, I probably should too.
I really feel like I had to.
Okay. Yeah.
I mean, yeah.
But seriously, buy them a lot because that will really help our bottom line.
Yeah.
So
I just own so much stock that a 1% rise from all of our listeners buying into them is gonna get me on insider trading.
Yep.
Anyway, like I said, a stock is partial ownership in a company. So if you own, let's say like one stock in Apple, you own one out of, I don't know, probably millions of shares of stock in Apple.
Wow.
Okay. So if you own stock in Apple and they decide to pay you a dividend, that dividend would be a sum of money that's paid regularly. Typically, they do it quarterly by a company to its shareholders out of its profits or reserves. Now, Apple does not pay dividends, I don't believe, because that's just silly for a company to share profits with its owners, I guess.
Well, they're valuable enough and they increase in value enough. They probably don't need to offer that as a incentive.
Yeah, some other companies that kind of stay stagnant but still make a lot of money, they may pay off dividends. I'm trying to think of ones that I know that actually do pay off dividends, and I can't think of any. So I'm sorry for failing you. All right. You'll also hear the term when people talk about the stock market of equities, and equities are basically just stocks of publicly held companies. So it's another word for stock. It can also mean other things, maybe bonds. Yeah, I think bonds are in the are also no, bonds are the opposite, or not opposite, but they're a different thing from equities. Equities are strictly ownership of a company. Sorry, man. I'm on that wind down from work because this is right after work. So my mind's in two different areas. One's in stock markets, and then the other is in metal buildings. So
yeah, well, mine never wound up today. So
happy Martin Luther King Jr. Day.
Yep.
Yeah, we forgot to say that on the last podcast, so we'll say it 4 or 5 days late, however you want to measure it.
That's when we're recording this.
Yeah. So the stock market is the collection of markets and exchanges where the issuing and trading of equities, bonds, and other securities takes place. I was thinking of securities because securities are equities and bonds. Okay. That's why I was confused. And then this takes place either through formal exchanges or over-the-counter markets, and I'll get into that right now. An exchange is a marketplace in which securities, commodities, derivatives, and other financial instruments are traded. I didn't want to define all of those. All you need to care about is the securities portion, and we're mostly going to focus on stocks because, stock markets.
That makes sense.
Yeah.
Good idea.
The core function of an exchange is to ensure fair and orderly trading as well as efficient dissemination of price information for any securities trading on that exchange. Exchanges give companies, governments, and other groups a platform to sell securities to the investing public. All right. Over-the-counter markets are decentralized markets without a central physical location where market participants trade with one another through various communication modes such as the telephone, email, and proprietary electronic trading systems. These markets can make trades without the actual price of stock being known and with fewer regulations. For the degenerates who have watched Wolf of Wall Street, this is the first company Jordan Belfort works for after the market crashed in the 80s. I'll talk about that a little bit later because he trades off of the pink sheets.
Can I just pause you real quick?
Thing. Yeah.
Did you just call it the Wolf of Wall Street?
Yeah.
Oh my gosh. You're one of those? Say woof. Wolf, man. There's
wolf.
An L.
Yeah, I said wolf. What wolf?
Let's go to the tape.
Wolf.
I'm totally gonna put in that.
I'm sure you're gonna replay that and then just
replay it.
You're gonna sidebar and roast me on our podcast, and you'll know that I can't stand listening to myself talk, so I won't listen this far in.
Yep.
You're a terrible person.
I'll riff on it for a little bit and add my own voice in and act like you have nothing to say for yourself. All right, go ahead.
I am speechless there.
Yep.
That helps you out.
Okay.
All right. So I gave you the literal Investopedia.com definition of a stock market, but I'll be honest, if I had just heard that, I'd still have absolutely no clue what a stock market is and why I should know about it. So let's dig a little deeper. The stock market functions through two main sections. These sections are the primary and secondary markets. The primary markets are when new issues of stock are issued to the public. This event is called an initial public offering, or IPO. Another term explained on the Wolf of Wall Street.
Okay. Gotcha.
When these new issues of stock are issued, they correspond to the value of the company and how many stocks are being issued. So a good way to understand like this valuation and stocks thing is to think about Shark Tank. I'm sure you've seen Shark Tank, haven't you, Scott?
Mm-hmm. Well, watched that was pretty much all we did in one of my entrepreneurship classes.
Nice. All right. So when a valuation of the company is made by the sharks or the company owners, they give a percent and an amount of money. So this percentage and amount of money calculates out to what the people think the value of the company is. This is often a disagreement between the owners and the sharks, because the sharks want more of the company for the same amount of money or something. Mm-hmm. But if we remove the Shark Tank aspect and look at this from the stock market perspective, the amount of shares released and the amount of money those shares are worth replace the percentages. So if a company goes public by issuing stock to the public for purchase, they issue a certain amount of shares of their company. Let's say they release 100 shares and each share is initially offered at $100. This would mean that the company is worth $10,000 at their IPO. So the price of the stock is determined by the company because the IPO is a way for the company to raise money and invest in itself. If you think it's too expensive, and a lot of other people think it's too expensive, they might not buy the stock, and then the IPO fails. Another would be the stock is way overvalued, and then people want to jump on the IPO. And this happened with Snapchat recently, where it was way overvalued, but they knew that the hype was so big that a lot of people just bought in right at the initial public offering, and then they sold it like a week later, and the stock came crashing down way below IPO price.
So did the price go like at the beginning it went up pretty good, and then it just crashed?
It shot up pretty high. I think they started out with a share price of $17, and then it shot up all the way to like 30-ish. These are just off the top of my head, so don't call me out on these. And then it went back down to, I want to say like $13 after about a week of trading.
Okay.
Yeah.
Wow. Yeah.
Yep.
It's bad when it goes below the
yeah, when it goes
IPO.
below the IPO price, that's when like the company, the company was overvalued to begin with.
Yeah.
All right.
Because in this case, they don't make money.
Yep. Primary markets are often used by institutional investors who purchase shares from investment banks. But after the IPO, all trading of stock is done on secondary markets, where the company no longer receives money from the selling of its stocks. Instead, just the stock price that moves up and down with the valuation of the company is sold and bought by people who think it's either going to go down or up. Mm-hmm. Secondary markets include exchanges like the New York Stock Exchange and NASDAQ. You'll hear Wall Street, and that's typically the New York Stock Exchange is what they're referring to because it's located on Wall Street in New York. Yeah. And an exchange is an entity that brings together buyers and sellers of stock in an, I put in quotes, organized manner. I say organized skeptically because these exchanges seem like a madhouse to those on the outside. You see people like yelling and saying all sorts of terrible stuff. Like if you've seen Wolf of Wall Street, when he first walks into the brokerage and they're just yelling all sorts of terrible things at each other. That's kind of what I imagine these exchanges to be like. But the organization actually refers to like the shortened names of stocks. So if you wanted to buy Apple, it would be AAPL. And then the price listed, that's really what the exchange is this listing of prices and the shortening of names so that you're not like shouting, I want to buy General Motors, this much stock, blah, blah, blah.
Okay.
Yeah, so
Yeah.
Go ahead.
Oh, so it's like, is that, so is a lot of the secondary markets done electronically now?
Yes.
Okay.
But you still have to have like a registration within the exchanges to do the secondary markets. We'll
Are
get
these
into
physical locations?
Yes.
Okay.
I believe the Nasdaq might be fully online, but the New York Stock Exchange is obviously the actual physical location where people still sell like to each other in person.
Well, because I'm picturing the scene from The Dark Knight Rises when Bane crashes the stock market and the stock exchange and, beats somebody up with the motorcycle helmet, and then they tie those hostages on the front and back of their motorcycles. Yep.
That's exactly what happens every day at the New York Stock Exchange or the Gotham Stock Exchange.
Yeah.
They mostly happen online. Like they use computers instead of like handing someone a slip of paper that says, this is 100 shares of Apple. Here you go. Now you've got to take that back to where you work and sell it,
Gotcha.
Yeah.
Okay.
So we've talked about the overall stock markets, and it's good to talk about stocks and their roles after the IPO. So you've got two types of stocks. You've got over-the-counter stocks and then listed securities. Over-the-counter stocks are traded directly between parties via a dealer network and are not listed on any exchange. Although these stocks aren't on exchanges, they can still be listed on the pink sheets. So Wolf of Wall Street watchers, the pink sheets era, or like when he first begins to make his own company, or right before that, when he's working in New Jersey, that's when he's trading off of the pink sheets, and that's how he makes all the money, because pink sheets trading, they typically are referred to as penny stocks. Some of them are just like bad companies that they want to keep off of the exchanges. But over-the-counter stocks don't need to be reported to the Securities and Exchange Commission, so finding credible information on what these actual stocks are can be very difficult. Penny stocks, as I referred to earlier, they are stocks that trade for less than $5 a share, and there was a huge craze over them because people were getting rich overnight just buying penny stocks and then selling at like $4 when they bought it at $1. Yeah. Pretty cool stuff.
Yeah.
And then we've got listed securities, and listed securities are the securities that are traded on exchanges and regulated by the Securities and Exchange Commission, or SEC. Securities that meet the SEC requirements and the requirements for an exchange are included in this classification. So let's say you wanted to trade a stock on the New York Stock Exchange. That stock would have to meet both the SEC requirements and then the New York Stock Exchange requirements. A good example of this is actually with the NASDAQ. That's where a lot of tech stocks are located and traded.
Okay.
And that's because it was set up for these tech stocks, and the requirements for these tech stocks are within the NASDAQ, or however I should have phrased that.
Probably differently.
That makes sense, right?
So in terms of like these classifications of stocks, how much of this is like government regulation and how much of it is the, just regulation by the exchanges themselves?
I believe the Security and Exchange Commission kind of is the overlord of all with the listed securities. With the over-the-counter stocks, there's barely any regulation. Within the exchanges,
Obviously, there's rules there.
Yeah, there's rules there, but mostly who you're worried about is the SEC. And
gotcha.
There are parts in Wolf of Wall Street that also talk about the SEC and how they're trying to take down Mr. Belfort. Rightly so, because he does some bad stuff.
That's what I've heard. I've never seen the movie, but
yeah,
I don't know. I looked up Jordan Belfort when that movie came out because I didn't know who that was, but yeah, not a great guy.
Lots of insider trading and then other things that are illegal that outside of the SEC regulated environment.
See, that's the thing with insider trading. And for those of you who don't know, insider trading is like you're making deals because you know something specifically about the company that it's not public knowledge.
Yep.
I don't know. It feels like that's just being smart. I don't know why that's illegal. Like if you have that advantage, take advantage of it.
Yeah, I think it has more to do with if you could do that, then you would be able to purchase a lot of stock in the company before their shares start to rise, or vice versa. You could do what they call a pump and dump, where you own a bunch of stock, you elevate that price, and then you dump all of your shares at that high price, even though it's way overvalued, and then crash the market. And I think that's kind of where, I get where you're getting at because of our.
Sounds like it's a good money making to me, but
it's
just the filthy capitalist.
It sounds a little shady, is all I have to say. I don't know.
Yeah,
I don't know how I feel about it because I've gone back and forth. Like, I get why it's illegal, but I also don't know why the government necessarily needs to be involved
in anything. I guess. What?
In anything. Oh dear. All right.
Anyways.
So
all right.
So now we know a little bit more about stocks. You should understand, like, they're a part ownership of the company, and there's a couple different types. But we don't know about the people that work with them. So there are numerous jobs you can have within the stock market, including stockbrokers, traders, stock analysts, portfolio managers, and investment bankers. So stockbrokers are or registered representatives, as they're technically defined in the United States. They are the licensed professionals who buy and sell securities on behalf of investors. For somebody who trades online, you use a broker when purchasing or selling stock. So there's a ton of them out there. I use this thing called TradingView, and they have their own broker. I don't actually use it to trade at all because I haven't developed a plan or anything that I'll get into in a little bit. But that's what some investors use to as their stockbroker. Moving on, the stock analysts, they perform research and rate the securities on an exchange or maybe on the peak sheets as buy, sell, or hold. Think Colin Cowherd's segment of buy, sell, or hold. Basically, if something looks like it's going to go up, you want to buy it. If it looks like it's going to go down, you want to sell it. And hold is basically just like wait for it to show one way or the other what's going to happen. That makes sense?
Yep.
Cool. All right. This research that stock analysts do gets disseminated to clients and interested parties to decide whether to buy or sell the stock, or, as I said, hold. Crazy terminology. Moving on, you've got portfolio managers. They are professionals who invest portfolios or collections of securities for clients. These managers get recommendations from analysts and make buy/sell decisions for the portfolio. Mutual fund companies, hedge funds, and pension plans use portfolio managers to make decisions and set the investment strategies for the money they hold. Moving into investment bankers, they represent companies in various capacities, such as private companies that want to go public via an IPO or companies that are involved with pending mergers and acquisitions. Alrighty.
All right. Yeah, because I have a portfolio manager, I think. Because
Cool.
they do like mutual funds. Yeah.
Yeah, mutual funds, and that's a big one. A lot of people are invested in mutual funds and mutual fund companies.
Should. They're pretty good.
Yeah, definitely.
Well, not all of them.
They typically outperform, I want to say.
They're usually fairly consistent, especially if you can find a good one with a good track record.
Yeah, definitely.
And then
do your research.
Yeah, I mean, it solves the whole, like, I don't know what to do. Like, I don't know how to invest.
Or I don't have enough time to invest.
Right.
Yeah.
And you're just like, hey. Well, because then also a lot of times, or a lot of what they get paid is really just by how well they're doing with your money. So, I mean, you can probably negotiate that. And so if they're doing well, then,
Yep.
You're getting more money. So,
yeah.
That's just my little investment advice.
and
someone who's read.
We can divulge a little bit of that later.
Yeah. All right.
I have that at the end of our podcast, so stick around, everybody. I've explained the stock market now. I've explained who works in the stock market. One good place to really start looking at the stock market, if you've been interested in it and you want to know like what this kind of looks like, look at an index. So maybe you've heard the word index. Maybe you've heard the word Dow Jones Industrial Average or the S&P 500. You could use the NASDAQ, although because that's an exchange, I want to avoid the confusion. So I'm going to refer to the Dow Jones and the S&P 500. And an index, before I get too carried away, is a way of looking at the overall performance of the market you're interested in. So the Dow Jones is a collection of 30 top performing companies, including but not limited to 3M, General Electric, Goldman Sachs, and ExxonMobil. Again, these companies are companies that my family may or may not own stock in. I think I legally have to tell you that. I'm not telling you to buy or sell. Consult someone. And then the S&P 500 is like the Dow Jones, but with 500 top performing companies. The S&P looks extremely volatile until you zoom out to like a yearly level, and you'll notice for both the Dow Jones and the S&P 500, the general trend is always upward. So even during the crash of 2008, if you look from like 1960 to 2008, the general trend was upward, and you still would have made money if you had money in at 1960 or whatever I said.
Right.
So does that make sense?
Yeah, I think so. I've always wondered what those things were, because I always saw my dad would watch like Mad Money or whatever, like Jim Cramer and stuff, and he was a fun guy to watch, but I didn't know what he was saying. Yeah,
and he's a definite entertainer.
Yeah, and so like I see these terms and everything on the screen, and they didn't never mean anything to me, but now they do.
Yeah. So, and what you're looking at, like I said, you're just looking at the general performance of those 30 or 500 top performing companies, and a lot of people, like news organizations and most Americans, look to these two indexes to see how the overall economy is performing. With recent record-breaking results, wow, I can't talk right now, in the Dow Jones, the economy has been perceived as performing very well. In fact, 60% of Americans think the economy is excellent right now. Now, some investment managers will trade index funds or like manage index funds, and those are funds that diversify your portfolio into the aforementioned indexes. So a fund referring to to define a fund is referring to a mutual fund being a collection of people's money that can be used to purchase stocks larger than each individual could purchase. It's not the exact definition, but it's what helps me understand it. So basically you're pooling your money with, let's say, 100 other strangers to be able to diversify your portfolio, because diversification is the purchasing of different stocks in different areas of the market. And think of investing in maybe like an art business and a restaurant and a manufacturing company along with others. If you were to do that on your own, you wouldn't have the recommended $50,000 to invest in those kinds of stocks. But if you pooled your money together in a mutual fund, then you can purchase those kinds of stocks and diversify that portfolio. And then you all get to kind of hedge your bets, because that's another reason you want to diversify, is to hedge your bets on where the stock market goes. You could have like ill-performing stocks now in one sector, but when the stock market crashes, it's called an inverted stock and it shoots up, like ramen noodles and beer are inverted stocks. So when the economy is doing well, they aren't such great performing stocks.
I wonder why.
But then everyone gets depressed and they're poor, so they start buying beer and ramen noodles. And so that's how it's been explained to me in personal finance, and I think that's a funny way of like discussing what diversification can do for you and your portfolio. So it'll help you to stabilize during the bad times as well as shoot up during the good times. Shoot up being in the stock market kind of way.
Yes. Speaking of other stocks that go up, when what? Okay.
Anyway. So, some of you might be like, okay, I've looked at this yearly view of the Dow Jones. I've looked at these different things that you've talked about. Maybe you decided to like throw $5 into something, I don't know, but you want to like watch the stock go up and down, and you don't know where to go for that. My answer is tradingview.com, and this is going to sound like an advertisement for tradingview.com. Now, it's the best way I've found to look at stocks, unless you're like a true expert, and then you might have something better than TradingView. But I do know a couple experts who use TradingView, and it is free to use unless you want additional features. So check it out. It's like
use
$20.
Promo code. No.
use promo code. I don't know. Look one up on the internet.
Yeah.
Anyway,
tell them that we sent you.
If you want to use additional features or look even further back in the history of the stock or the currencies that you want to trade, you can pay like $20 a month for a subscription. Again, I'm not being paid to tell you this, so do whatever you want with your life. One thing fun to do on this, though, and it does refer back to our Bitcoin one, is to watch Bitcoin to US dollar on TradingView. And since they're both fake currencies, it's fun to watch how one's value related to the other.
What is this altcoin called USD? I've heard it's like not backed by anything, and like it's some bank can just print as much of it as they want.
You said it, not me.
So
IRS, go after Scott.
Hey, please don't take my USD. I do like it.
I do enjoy using your fiat currency.
Yes.
To purchase tangible assets.
Yes, please.
Anyway.
Like Bitcoin.
Anyway. So when you're looking at stocks on TradingView, you'll see these red and green bars. So these bars are called candles. It would have helped had I known this before I started my trading course that I took online. So this is the reason I'm telling you this part. They're called candles, and then there are lines extending above and below, and those are called wicks. So candles show the open and close of a particular stock you're looking at, while wicks show the extremes in both directions during a trading period that you're looking at on TradingView. So you can find the trading period in the upper left-hand corner on TradingView. I like to watch like 5 or 3 minute trade periods. That's what like a day trader who only trades currencies is going to trade on. But it's really interesting to watch it just unfold and watch the market go up and down. So that's what I do. And the reason I watch Bitcoin on these kinds of trading periods is because not because I own it, but because it jumps multiple hundreds of dollars in such short periods. And I just think it's fascinating to watch, like, just massive leaps and bounds of money for people.
Yeah, for sure.
These charts are used. If you're interested in trading, definitely look into it more. This is about stock markets, not necessarily trading, so I'm not going to get into it. Otherwise, it would be 5 hours long. But these charts are used to develop patterns, figure out where they think the stock market is going to go, and to help figure out an investing plan for day traders. So day traders are individuals who trade stocks or currencies on a daily basis, possibly minutes or hourly basis for some that really get into it. They set up basically lines and patterns, and then they write rules for how they're going to make money that day. An interesting thing I've learned through taking courses on trading is that day traders can make money even when the markets go down. See, they sell it off when it's high, they buy it when it's low, and then they like sell the rebound and stuff like that. It's crazy.
Right. Well, because it's probably rarely ever a straight drop. It's going to have
yeah. It has what are called either lower highs or retests of the high, and then if you're smart enough, you can buy that low and then sell that high really quickly, or you can wait for a bigger pattern to emerge within the market.
Right.
Alrighty. So that's the end of the facts, but if you do want to know how to get involved, I'll talk a little bit more about how a person like you might invest. I'm kind of going for a target audience of like someone who knows absolutely nothing about investing, mostly like college students and stuff. I found like that's a decent demographic. Yeah.
Just talk to me.
All right, I'll talk to you, Scott. So Scott, since you're poor, and you can't invest on a daily, hourly, or shorter basis, I'd recommend looking into something like a 401k or IRA. You could go with regular or Roth, and I'll get to that.
Get a Roth
soon. Maybe.
Yeah, get a Roth.
You never know.
Dave Ramsey says get a Roth.
Yeah. And Dave Ramsey is smart, but there could be reasons you want to get a regular one.
Yeah.
And these are handled by professionals who can manage your portfolio of stocks and help to set up a good retirement fund for such a poor and despicable human being like you, Scott. Just kidding.
Really?
Well,
even me?
You're the only one that's despicable.
Okay.
All other poor people are good people.
No, but they can even do it for me?
Yeah, they could do it for you.
Wow.
Yeah. All right. I'm invested in both a regular 401k and a Roth 401k. Roth basically means I pay taxes on the money before I put it into the 401k, but I can take it out tax-free whenever, while a regular 401k is tax deferred, meaning I'll pay taxes on that money when I receive the benefits. The reason I do both is the same as the reason to diversify your investments. So diversifying between the two helps to hedge my bets on where taxation in this country will be when I retire. Taxes could go up or down depending on the political fluctuations in my life and yours. So having both is a great start to retiring.
See, I thought it was the other way around. I thought Roths, you paid taxes when you took it out.
No.
Oh, well.
I don't believe. Hey,
well,
did I get those confused? Look that up.
I don't know.
But I did look it up last night just to make sure I had it right.
You might be right. Maybe I'm just an idiot.
Maybe I skimmed the wrong words. Okay. So let's say you're like Scott and I, and you like to think you're smarter than the people at an investment firm / mutual fund. Only kidding, because I have no idea what's going on there. there are free apps you can use to trade your own stock. So one is called Robinhood. It's strictly on smartphones. I've tried to use it, but my bank isn't in their like network, so I'd have to give them a bunch of information, and I don't know how comfortable I am with that. But it's a little bit harder to sign up for me. If you have a normal like big bank, I've heard good things about them. Eventually I'll get on Robinhood, but not right now. And if you're not good at the whole investing thing in general, if you want to stay out of it, you think that it's a scam, blah, blah, blah. First off, reconsider everything that you're doing with your life. And second off, maybe you may not have enough money to start, and you don't want to lose it all on buying one share of Apple or something. As long as you're not living paycheck to paycheck, I've got a decent plan for you. If you're straight out of college, you got your first big boy or big girl job, instead of spending all the money you get in each paycheck, just put the extra money in savings every 2 weeks, and live like a fake paycheck to paycheck life. This sort of plan has worked well for me. I've been living pretty good. My rent's not too high since, I'm a millennial living at home with my parents, but I've only been working for 8 months, and I've got a solid like emergency fund away, and I'm going to start putting more into investments and stuff like that. So yeah, that's Sweet. The end of that. A lot of the information came from Investopedia.com. It's a great place. If you're ever wondering about any of the terms that I didn't define, I tried to define a lot of them. Check out Investopedia. Highly recommended. Right. Other than that, you got any more questions?
No, you were right about the Roth versus regular.
Whoop, whoop.
That was my B.
Yeah.
But no, other than that, no, that's actually a lot of good information. A lot of stuff I didn't know. Sweet. So I feel like from there, from this point, you kind of just get into more strategies.
Yep. Right? Yeah. And the different types of funds and everything. Like I could have gone through what a hedge fund is and everything like that, but I didn't. So.
Oh, and if you haven't read Financial Peace by Dave Ramsey.
Yeah.
And he explains a lot of this stuff too, and it makes a lot of sense. And basically, just do what Dave Ramsey says, and you'll be fine.
He has a very good understanding of it all. I'm intrigued by this. How do you feel about credit cards?
It kind of depends on. I probably won't ever get one, but I see why sometimes it can be nice, especially if you have good self-control, because it's important that you just pay it off. But sometimes, like, there's an emergency that comes up and you need to pay for something with money you don't have.
Yeah.
And I don't know.
Yeah, I would agree with you. I like the well, maybe first off I should tell everyone why I brought that up. See, Dave Ramsey is like very against credit cards. Yeah. One of his favorite phrases is no one ever got rich off of credit card rewards and stuff like that. Oh, yeah. But I have a different point of view, and I'm stealing it from one of our influential podcasters. But like, if you can get 2 to 3% back on anything you do, spend money on, and then you just pay it off at the end of the month because you have the money, but you get the rewards too, then I think that's like a decent plan to try and save a little bit of money, Right. 1 to 2% adds up, and then if you throw that in an account along with your regular investments.
And you got to think about Ramsey's target audience too. He's targeting people that have had a lot of trouble staying out of debt.
Yeah,
and so he's like, for you guys, it's not worth the temptation. But I think he'd say, if you do have that self-control and you've shown that self-control and you're in a good financial situation, then go for it.
Maybe take a look at it. Yeah. I can see that. And people that have followed Dave Ramsey's plan have paid off like $500,000 in debt, which is just astronomical.
Yeah, for sure.
Especially with how like his stuff has been around since before the 2008 drop or financial crisis, and I'm trying to, what is it? interest rates were not as low as they are nowadays.
Yeah.
So yeah,
for sure.
That's all I got for you.
All right, dude. Appreciate it. That's really good.
Yeah, thanks, man.
So yeah, I guess this one's coming out on Friday, and we will, I guess, talk to you next time.
Get learning.
I want to live in a world where Blake Bortles is a Super Bowl champion.
I've seen posts where they compared Tom Brady's playoff losses to Blake Bortles' playoff losses, and Blake Bortles has 0 playoff losses right now. So,
well, it's the Twitter account Blake Bortles Facts. So funny.
That's incredible.
They compared Blake Bortles and LeBron James, and they're like, Blake Bortles has like 90 touchdown passes. LeBron James has 0. Blake Bortles has no NBA Finals losses, and LeBron has 5. But my favorite one is they superimposed Blake Bortles' face on top of Bane when he walks into the football stadium after he just blows up the field where the Steelers are playing. I was like, yes, let's go.
That's wonderful.
Oh, man. That's funny.